It's been such a volatile period for the markets recently. October, of course, the worst month for the S&P 500 since 2011. Tons of volatility. Where does this leave ETFs? Joining me now is Tom Psarofagis, ETF analyst with Bloomberg Intelligence. And Tom, you have put out research talking about how after this volatility, it's tough to find either an equity or a fixed income ETF that could hold some promise. Talk to us about the equity side first.
Sure. So we have a note out on the terminal, and even though the market's been going up the last couple of days, when you still look at the equity universe of ETFs, you still have about half of them that are underwater. So meaning about half of the market of ETFs have negative returns. So I sort of looked at this trend historically, right, to see these big spikes and losses. So what tends to happen is pretty much on cue every 2 years, we tend to see these really big spikes and losses. The other thing that's really interesting is sort of the velocity of it. So in the past spikes, it reaches high as 70%, meaning that 70% of the market of equity ETFs had losses. Now we're at about 45, 50. So it'd be interesting to see if that trend holds true, if we continue to see more, sort of a bigger spike in losses for equity ETFs.
So that might actually suggest that there could be some more pain to the downside for stocks. Am I understanding that correctly?
Yeah, if the trend, how we saw historically, stays true, because now it was as high as 70% both other times that we saw in the past.
Oh, that's pretty interesting.
Yeah.
Inside look for the major averages, perhaps off of ETFs. What about fixed income?
Yeah, so that's sort of a different animal, right? So equities is obviously being impacted by the market. Fixed income is a rate story. So you have this interesting time where both you have losses spiking in equity ETFs and losses spiking in fixed income ETFs. So there in fixed income, you have about 2/3 of the market that's underwater over the last year. So what was interesting in October, you have these nowhere to go, right? So investors' equity losses are going up, fixed income losses are going up. So that's how we saw this really big shift in October to short duration, type product, really cash type ETFs, sort of as a safe haven.
And so I know that you've also done some work around leveraged ETFs.
Yeah, so this is really interesting. So what we tend to see is during big down months of the S&P, you have these traders, right? They're really sort of hoping for a quick rebound in the market. They're using leverage long ETFs. So we saw this big acceleration in flows coming into this product. And it was actually a record. It was $3.6 billion for the month of October coming into leverage ETPs. So it was predominantly, most of it was tech, so everyone was sort of hoping for a tech rebound. But right now it's sort of paying off for them because the market's been going up over the last couple of days. So it's been a trade so far that's been working.